Thank you for tuning into the Alt Funds Investment Podcast. This conversation is with Carl Szantyr, founder of Blockstone Capital. We'll get into Carl's background in the conversation, but Blockstone is a cryptocurrency fund of funds. Fund of fund invests in other funds. We discuss the ins and outs of fund of funds in general, as well as crypto fund of funds. We also discuss what a fund of funds looks for when making investments in underlying funds. Just a reminder here that nothing said is legal, tax, or investment advice. Check out the full disclaimer below in the description. We hope you enjoy this conversation. Please like and subscribe if you find this information helpful, and check the links in the description to connect with us and Carl. I guess just like real quick, you want to tell us what a fund of fund is?
So yeah, thank you for having me, guys. Nice to see you again. So as you know, yeah, we are FCA regulated alternative investment fund manager in London. We set up the shop here in the UK back in 2017, very TradFi. All the partners have different background, but we used to run a city and commodities, and I joined the partnership in order to develop the digital asset offer for institutions. So mainly at the beginning for the capital raising, family office, multi-family office, and high net worth individual. And so long story short, from all the research we've made, it made sense to start with a fund of fund for those investors. So what is a fund of fund was the question. And in the crypto space, it's a multi-portfolio manager. So our choice is to have target of very low volatility for investors. So we don't want to have more than 25% volatility in the portfolio. We don't want to experience a drawdown more than 15%. So for that, we've been analyzing the markets. So to give you an idea, you start with a list of 1,200 plus funds. In order to get that list, so you need to do a lot of research. We started that in 2018, when we didn't have so many funds back then and very little data available. And from here, you just classify, you got two main categories in the crypto space. You got the venture capital fund, closed-ended. So we put that aside because we are really focused on liquidity, open-ended fund, in order to be able to provide liquidity to investors, because most of them don't want to be locked up for the next 10 years, more than crypto. So it's very different type of investment, but this is what we see on our front. And then you can categorize, you got like 600 plus funds left running liquid strategy as of today. And you can categorize them between three categories. So you got the fundamental, which are like value investing, like funds, beta oriented, long bias, by crypto. So you can be long Bitcoin, ETH, but with active management in place. This is what is important. It's not just an ETF or just a trust, because the research proved that active management is bringing a lot of alpha for investors. So you being long only is the first step to get into crypto, but bringing active management on top is really important. And then we got the trading fund, who are more quant fund, quant directional. And we got what we call the market neutral. So it's a broad term in crypto, but we market neutral, it's real market neutral. So we want funds who print positive, potentially positive returns on a monthly basis and don't take directional risk. And so our portfolio is, it's between the three, so yeah, weighted between the three categories. And as we are low vol target, we are mostly invested in market neutral. So yeah. I can pause here maybe. I can continue for an hour. So
take us back. Take us back to the start. What's your background? What was your team's background? Why did you choose to do a crypto fund, and what made you guys the right people to do it?
So yeah, it story started in 2013. So when I moved to Asia, so just to give you a bit of background, I'm coming from traditional finance. 25, I set up my own company, was working as an independent financial advisor under the umbrella of Rothschild Bank. So coming from the private dealing with high net worth individual and specialized in derivative and structured product for my clients. And long story short, I moved to Southeast Asia, to Singapore to be precise, in 2012 and 2013, our CTO there, so to do some private equity investment. And our CTO just introduced me to Bitcoin. But being a very traditional finance and not so much tech advanced back then, I just push him back, telling like, yeah, digital money, like, dude, you got central banks, you know what they're doing, you know, like, just don't bother me with your crazy stuff. But which brings to the story when I moved back to Europe, and in London, in 2015, 16. And, that's when I heard for the second time about Bitcoin, and it raised an interest. So I started to study it, and, as every asset or everything, you know, if you don't put your money, you never learn. And so I started to invest. So I went through the bull market in 2017. It was great. And then to the bear market, long bear market. And I found it really, really interesting. And I was doing an MBA then in 2018, 2020. And so I wanted to launch a fund that the same thing. So how do you learn about an asset class? To speak to the manager no better than you. So you learn from them. So that's how I started. So I started to speak to hedge fund manager in the crypto space, and I was looking to build like a market neutral portfolio back then. Understanding that, okay, this is a bear market. I have no idea how long it's going to last, but at least if you want to have some kind of exposure, and it was really impossible to build something, not even, I didn't have enough fun back then to build a portfolio. And my other trouble was to raise money through friends and family, who thought I got crazy speaking about this crazy stuff of digital assets. So it didn't work out, but everybody called me back, in 2020. So fast forward 2020, you got the DeFi summer, and after that, you got people, Carl, end of 2020, were you still doing crypto? Yeah, what do you do? What should I do? And started to understand that, okay, I can have, there is a business here now. And so yeah. And just long story short, I met the founder of Blockstone Capital, my co-founder. So yeah, during my MBA, so he's a LBS grad, and so we had some class in Middle East together. And Sam is coming from commodity trading, and so I asked him if he would be keen to join forces with me, because he started on his side to mine crypto back in 2014. And so we had this connection. We did some deal together. So we've been working on private equity deals. So we did some business, so understanding, okay, we know how to work together. We got this passion for crypto. He was willing to set up a hedge fund as well. So like, let's do it. And yeah, so yeah, we got Blockstone Capital out as a fund of fund, multi-portfolio manager, and we are up and running. And 22 has been hectic. 23 is more fun. And yeah. So just moving forward.
That's awesome. That's great, Carl. Couple questions. I'm curious. Obviously, you speak to fund managers, right? Given you are a fund of funds,
Yeah.
Your fund of funds approach here as far as that goes. I'm just curious what your process looks like. How do you source these fund managers? And then what does that due diligence process look like as you go through and have those conversations?
That's the fun part, the due diligence process. So we work, so we are very, so we built an algo. It's a quant selection that is done first. First job, basically, in our business, the way we run it, it's to offer a non-correlated, investment to those institutions. What you don't want is to allocate money to crypto and to look at yourself at the end of the year and to be 90% correlated to NASDAQ or S&P, which is the case for most of the fund in the market. So we made sure that the fund selection is done on a quantitative basis at the beginning. So analyzing all the returns of the performance of the fund in order to build this portfolio, which is going to bring what we need. And this is the first thing. So you need to connect to everyone, make sure you get the data up to date, and then you start the due diligence process to pick the best in class. So you need to classify the whole market. It's like 650 funds. Out of those guys, you got like 300, more than 300 of them. They are self-proclaimed traders. So it's not institutional grade. Doesn't mean that there are bad people or you couldn't allocate. It's just the setup is not institutional grade. So we are very picky on the fund allocation. So we don't do managed accounts for sole trader. It's not something we deal with. We want people with proper hedge fund already up, running, who got enough runway in order to run their business, because this is a risk you don't want to have. You don't want to have a fund that closes within the next 6 months. So then they need to have a UM already. They need to have a background of the manager is really important. So something we look at. So where do they come from? Did they already manage money in the past, coming from TradFi? So most of the people we look at, people coming from traditional finance who were managing good already in the past, and not a 2 million or 5 million book, like people who manage a lot of money and they know how to do it. So and then we follow our CEO is the same thing. He's got like over 20 years of traditional finance. He's been CEO, CFO of hedge funds. And so he's running the due diligence process, and we go through everything you can ask. It's a people business at the end of the day. So what is important is to be to click with the manager, to have that he has a good understanding of how to run a business, because he's got a company to run and a fund to run, and then he knows what he's doing as a portfolio manager. So
one of the things you mentioned institutional grade. Talk to us about that. Well, how do you differentiate somebody that's institutional grade versus somebody that's just maybe a good trader operating a fund?
About what I just said, the whole setup. What is institutional grade? It's like when you're managing money from London, you need to be regulated by the FCA as an investment manager. So you're not managing the money here and having an investment manager in Cayman, for instance, with a Cayman structure. It's not right. But it can be those kind of things. You don't have, as an auditor, your cousin doing the audit of your account. You have a tier one. I'm not asking you to pay to pay for the bigger audit firms, but you need to make the effort and to have an understanding of what the setup should look like. You have to have risk management in place, risk control. You need to have a strong tech stack. Moreover, when you touch crypto, you need to understand why your prime you work with, how you deal with the custody. It's a 24/7 market. So how is it said? You have stop losses in place, but you got like so many things to look at. And so the thing is, you have to really come with an open mind in crypto, because if you do your hedge fund selection the same way you do it in TradFi, you don't allocate money to anyone, because it's an emerging and nascent asset class. So not everything can be perfect. And so you have to be less demanding. But so it's of that you need to really focus on, speak to your fund and the fund manager, and have an understanding of their business.
That makes a lot of sense. And as far as like the size of manager you're focused on, is that obviously, as you make allocations, you don't want to be the majority stakeholder, as there's things you look at?
It's always the same thing. So market is very complicated. You don't have a lot of fund with more than 50 million AUM. And the market it's still very, very small. Very you got few managers who are managing overall more than 100 million. So we are really focused on the big guys with long track record. So your universe is really, really shrinking. But on the other end, it's it's diminished the probability to have a blow up within your portfolio, which we don't want. And emerging manager, that's the same thing. It's like everybody, we all struggle. It's a very complicated year to raise AUM, and so emerging manager with small funds, very complicated. Last year, FTX and mostly for the market neutral, like they got really exposed to FTX, so it's a big problem in the market. So yeah, we focus like to build that, like people who got more than 40% exposure to FTX. It's kind of a no-go. It's even though they can explain that the algo is working and the strategy was working. No, it wasn't, because the overall thing, you got a drawdown of 40% that month, and it doesn't work. We didn't have the risk management in place in order to avoid to have so much exposure on an exchange. So it just little details. So yeah, people who got exposure, for instance, to FTX, but like 15% is acceptable. But even more than that, depending on strategy on how it happened. Yeah, by looking at all of that.
Yeah, I know that's great. Obviously, talking about the institutional focus, making sure they manage money, certain metrics you look at from that point of view, just the overall strategy. You mentioned, obviously the service provider aspect, using quality service providers, obviously with challenges in the last year or so. On the banking side, it's been some challenges, right?
Yeah. So the banking side, that's the same thing. Like we find some really funny stories. Like you got people, you're about to wire money, you make the due deal, like everything is ticking the box, and just before you ask for the bank details, and they send you trust of a lawyer, and you're like, guys, it's not happening. And but just tell me more about that. Why you didn't know it before? Yeah, they close our bank relationship. Okay, and get it. But how it's gonna work when you're gonna transfer the money to the exchange?
Right.
It's because he's not gonna transfer the money into your exchange account because he can't, because he's a lawyer. And the exchange, they got this process in place. So you put my money at risk. So you should understand that I'm not gonna do that. And but you got the banking side was a problem. And that's the same thing. A managing manager is very complicated because they need to get back some bank solutions, which can be very expensive in Switzerland. So they can't afford it. Like you're not going to pay 20 grand or 30 grand a year just for a bank account running when you manage 2 or 3 million. Doesn't make sense. And you're killing your returns and on top of everything else. And so yeah. So those guys, we'll see how they go. We see some funds already like shutting down, closing. So I guess more of them gonna close, smaller manager, which makes for the bigger players, it is more on the table for bigger players. So we'll see how it goes.
Great. Yeah, it sounds like you have a great good due diligence process, and it's great to hear that kind of what you guys are looking at there. From a transparency and just like more activity you want to see from the manager, I mean, going through operationally, there's more of a look through that you guys expecting from the underlying fund managers on a monthly basis? I mean, I know there's going to be challenges too as a fund of funds, getting the reporting from the underlying fund managers, administrators, things like that at quarter end, anything like that. It's unique from what you've seen lately.
So yeah, surprisingly, like we were maybe the first one was to have weekly reports. So it doesn't seem to be something very popular in the industry, but some people were like, okay, we want to have a position on a weekly basis. Yeah, sure, because I don't want to wait for your fact sheet. Like 2 weeks after the deadline, I need to understand where I am. And we are as much as possible, as much as we can deliver. And but people are very open. It's if you're a black box, basically, you're not gonna get any money. So it's
makes sense. Of course, yeah.
How about from when it comes to let's say diversification? How do you think about diversification where you don't want to be spread, let's say, too thin, investing in 30 different funds versus maybe not concentrated, being in just a couple of funds. How do you think about diversification from your perspective?
So on a fund perspective, so it's you got a magic number which is 7. This is the minimum number of fund you should allocate money to in order to get a proper diversification within your portfolio. Otherwise, it doesn't really work yet. So we allocate to 7 to 14 funds. We've been running, it's not even millions, it's billions of simulations to understand, okay, what would be the best allocation. So it doesn't make sense for us to allocate to more than 14 funds, basically, to optimize return, to minimize, to mitigate drawdowns or volatility. And then the diversification is done. So you pick the market neutral. You have an understanding of what the guys are doing, what they are trading, if they're doing lending, if it's vol, arb, whatever they can do in order to get their returns. But you make sure that the two managers don't trade against each other within your portfolio. You try as much as possible to have uncorrelated funds within your portfolio. It's not only offering to investors a vehicle that is uncorrelated to other asset class. It's also having an uncorrelated strategy within your portfolio. So we do that. We allocate, as I told you, mostly we are very heavy on market neutral. A few reasons. But it's a sideways market at the moment, so very complicated to make money. Also the way, and we got a bit better on fundamental allocation as well because yeah, we were expecting end of last year that things get a bit brighter, and it was right. But same thing, it's very small because you don't want to get above this 25% volatility target we have. And yeah, so you diversify. It's yeah. So then you got your different bucket. You pick your fund manager to make sure like within your portfolio it's working well. And we got our foundation portfolio, and each time we receive subscription and money in, we just look how to optimize this foundation portfolio. What could be on a monthly basis, we reevaluate the portfolio to see what's going on, and then we rebalance when it's needed in order to maintain and yeah, our targets.
Awesome.
Yeah, and one thing you touched on there, and you brought it up earlier too, you talked about like the quantitative process and running simulations. Can you talk about what that looks like on your end, and how do you guys, what does it look like in terms of gathering the data, and what do you do with the data from there?
Painful. So you got service provider in the market giving you data. It's not always accurate, so that's part of the first problem we faced like 2 years ago when we started. You just you got your database, you got a lot of returns, and then you pick some funds, and then you start to realize you make a good deal, and you realize that the fact sheet on your Excel spreadsheet doesn't match. Why? Because somebody made a mistake, and you paid for that service. So you need to gather the data yourself. You need to make sure that everybody's telling you the data, and you need to make sure that yeah, it's correctly entered. So then the algo, as the algo is an in-house algo, so it's mostly my business partner, yeah, so he's CIO, and he's taking care of that part. So he built it from scratch, and yeah, so it's yeah, you give him parameters, and it's working. Depending what you look for, so it all depends. So you can have like portfolio allocation. So then we got different portfolio, we look at them, we got the weights, we got different things, and then so the quantitative part is one thing, but that's the qualitative part on our 20 years each experience in TradFi. We make a stack tech, so we got an investment committee, but 3 partners sitting here. The one who is running the due deal, so in so Yev with the CIO running the investment part. Myself, I'm more on the strategy, managing the partnership, and doing the cap intro and speaking to investors. So we all discuss, we got our view, and we decide, okay, that's how we do the fund allocation. And
Very interesting. I guess on the we talked about a lot about the manager side due diligence process, which is great. That was very helpful. On the investor side, is there interesting questions that your investors ask you when talking about your value proposition as a fund operator? What does that look like? What's the interesting sentiment these days as investors and LPs have conversations with you and your team?
So investor side, what do they ask us? It all depends the level of education in crypto they have. You got some shops who are like really well aware of the interest of allocating money to crypto as a diversification within the portfolio, a diversification tool, sorry. You got some private bank in Switzerland doing it, and Seeds Bank, for instance, just launched a fund of fund on this business model, partnering with an Hong fund of fund already. So they do that. So they got this understanding. You got some multi-family office doing it as well, and they set up a proper desk expense because they are keen to allocate, let's say, quarter billion to crypto. So they got enough money in order to pay the overhead to get that done. So those people, the conversation is more, but they are doing the due diligence on us, trying to understand, okay, how those guys, that's always, they are legit, they run a proper shop, they are regulated, how does the audit look, what do they do, what is the process, how you manage your company. So they want to learn, then they like to learn what it's not giving the secret sauce, but yeah, the question can go, okay, what are the underlying fund? Your fund on the same, an emerging manager, so our track record is not that long. And, so you need to give a lot of information to investors. Then, yeah, what are the questions? Some other investors, they just want to have peace of mind. They don't have the resources. So that's the whole thing. To allocate 5% of your money and spend 80% of your time is not something you do as a family office. You can't do that. And, same thing, 5% is not coming from nowhere. It's like the magic number to, allocate to our strategy, in order to optimize your return, and to mitigate your drawdown on your volatility and improve your sharp to your overall portfolio. Below it's less interesting, and if you start to increase more than 5%, it's not as appealing as 5% is. So we made the math. The people who studied crypto a lot, private banks or multi-family office, I was talking about before, they agree on this 5% number, for instance. And then the conversation with some of the guys can be just to explain them what is Bitcoin. And so you can start from very early. It's a lot of education. So we both educate investors and fund managers in order for them to reach the institutional grade standards they need to get to in order for them to receive money. And
Yeah, that's great. That's great. Definitely important on the investor side. And when it comes to the fund side, kind of circling back to that, when you're having a conversation with a fund manager, they're looking to get an allocation. What are some maybe red flags that you would see that would make you not want to have a conversation with them? And what are some, things that you see that, maybe you want to continue the conversation?
lying can be one of the first one, lying on your fact sheet, pretending that FTX never happened. So you got returns, you received fact sheet, and you don't have drawdowns in November. It's not written there. Yeah, okay, I side pocketed it. Yeah, okay. So if you side pocket all your loss, and then you got positive return at the end of the day. So it's the kind of problem we can face. Problem when somebody's explaining me that his risk management is good because FTX is trading 100% on Binance, and if Binance collapsed anyway, market is falling apart, and it's how he's got risk management. I'm really kind not to give him money because if finance collapse, I don't want to lose everything with him. But 15% is acceptable. He doesn't get that. So yeah, it can be the no-go. So yeah, kind of red flag. Yeah, some people who don't understand what they are doing. When you ask somebody what is a short position and he's asking you what is a short and he's telling you before that he's running a long short, it's kind of, yeah, but we've seen a lot, like stories like this. It's like, yeah,
sounds like one might be personal experience.
yeah. So yeah, no, what would be a no-go? So it can be a red flag and a no-go for a moment. And then we reevaluate. It all depends. It's really on a case by case. So we got this quant, selection, but, it's qualitative work is more important. So we're still following people, following what they do every quarter, every 6 months, get back to them when we got an interest in the strategy or, yeah, because things are evolving. Yeah, you got some of the things which are fun, like you got some directional fund, outperforming the market last year. And just like, wow, Bitcoin is down 65%, you're down, I don't remember, 30 or something. So you did a good job. That's great. And then, after 1 hour, you manage to understand it does a good job because it doesn't invest the money. It's got only 20% of it. And it's just like, dude, I'm not paying you to allocate money in T-bills. So, okay, that's your investment decision is right, but how these 20% are doing in your investment crypto? And yeah, no, yeah, I underperform the market. Okay, right. So yeah, it's, yeah, but you see different things.
Yeah, that's a really interesting perspective because I know, I'll point to ARK, ARK Invest, like Kathy Woods. I know a lot of people hate on them. They go, oh, their strategy's down. Well, her whole job is to be fully allocated. She's not a hedge fund. She's not supposed to be trading cash. So I like where you're coming from on that end.
Yeah.
Definitely interesting. Yeah, great insight there. We always get this question. It's come up quite a bit from an AI perspective. That's a buzzword in the industry. People are using various aspects of AI, which has been around for a long time, but obviously talking about different strategies, trading strategies, a review, using different algorithms and models out there, machine learning. Any thoughts that you guys have looked at from your guys' business perspective, investing money as a fund-to-fund manager?
Yes. So we see, what we expect AI to have a big impact on, AI and blockchain company, like the startup which are under development at the moment. So it's going to be a big boom at some point. On my side, I don't have so much to say about AI. Of course, we start to use it internally as well. We got machine learning processes which are done. So I think it's improving. So it improves the quality of your work, your coding. It improves a lot of things, but you need to learn how to use it. It's,
Yeah, I think everybody has their kind of different take based on their business model and how they run their business today and what can they use while taking into account the risks and challenges there. What can they do to make things better, more efficient? Still keeping the human interaction, right? I mean, you still need the human intervention, the experts, but it makes.
Yeah. I wouldn't give my money to manage to ChatGPT, just yet. So, yeah.
Still a way. What are some of the most significant challenges that you face as a fund manager? And on the opposite end of that, what excites you the most in the current market?
At the moment, the most frustrating part is the capital raising, which is tough, even on our side. So we managed to raise money since November. So it's still, but it's a lot of work. We should double our AUM, by the end of the quarter. So it's good. We have a big pipeline, but people are really not throwing money at us. And this is the same case for everybody in the market. So, which is really frustrating because When you start to learn about the cycle, like I can't, I can't guarantee that next year we're gonna have a bull market, but halving is coming, and we should have started the bull market already. This story repeats itself, at least if it rhymes, and at least it's a good time to start to wet your feet and to start to allocate money. And if you want, so I completely understand investor and the people we talk to, they are on the markets, understand the risks. You had a massive counterparty risk after FTX, and but the dust has settled. And first quarter already gave people the confidence that Bitcoin is not going away. And now you got this institutional adoption. You got a spot ETF coming out soon. So all of that, it's playing in the good direction, in the right direction. And it's always the same thing. People gonna have FOMO at some point and gonna start to allocate money when Bitcoin gonna be back to 50 or 60K. I can't guarantee it's gonna happen. I do believe it. I do believe it's gonna be way higher than that. Yeah, so that part is really, it's just a matter of time. You have to be patient and keep doing the work and keep educating people and to make them feel comfortable. So that's what I do. And then what keeps us awake? Everything else. It's been like everything is keeping us awake. Like we had the first quarter was tough. When you got your banks closing one after the other, you want to understand the exposure of your underlying fund at some point, so you have, and then you got the depeg of USD spell. Like you always have some kind of events happening. Last month was quite quiet, which is really unusual for crypto, so no drama. And but we'll see. So you have always to be very alert and ready for something to happen. And
Definitely have to keep things moving and be ready for anything, right? The market changes so quickly. Swivel, if you will.
Right? Yeah, exactly. So on that front, it's not as a multi-portfolio, we as a fund of fund, it doesn't move so fast because it's like monthly subscription. So it's a bit slower, but that's the same thing. We very soon we're gonna be able to have to be way more efficient in our trading approach to improve the return to investors. So through managed account with the portfolio manager, we allocate money to. It's just an amount of allocation which needs to be bigger per manager to get there. And this is what we have under the hood. And in order, to, as you said, like one morning you wake up and you get a better feeling that the fundamental allocation and the fundamental portfolio manager, and you should be really, really long. You can rebalance your portfolio from market neutral to fundamental overnight, which is not the case at the moment because you got some redemptions process, which takes time. And that's part of the fun as well to deal with.
Definitely. Yeah. One quick question I was just thinking about it as we're going through this, which is great. Just from obviously being a fund manager, you're monitoring a lot of things as you talked about, both on the due diligence side for managers, portfolio, the environment where things are at. From just a fund manager's point of view, as you kind of are looking at the underlying managers on an ongoing basis, pay attention to guideline monitoring regarding the portfolio. Are they trying to go outside the scope of their current trading strategy at times, and you guys monitor that, or you guys see any of that type of activity as unprecedented environments happen in the markets, right? Certain managers may try to take advantage of certain things that it's not part of their strategy today in the PPM offering docs. I'm just curious if that's ever come up.
So no, you have to follow your PPM in a way. Drifting strategy, of course, we monitor that. But like for instance, on the market neutral perspective, as a fund manager, you have to be you have to reinvent yourself. Like if you keep doing the same thing all the time, you're not going to make money all the time. And so you need to change your strategy and to be some kind of multi-strat market neutral. Yeah, but so we monitor it. You can't tell me that you're market neutral and 1 month you make 15% up. Because you went long on something, you're not market neutral at this point. And if you got a drawdown of 10%, that's the same thing. I don't classify you as market neutral. So yeah, we monitor all of that, but basically you make sure like your people running CTAs are not in the market neutral, and because yeah, people like to sell themselves as market neutral during a bear market because they know that they're gonna get the money, but we just need to make sure that they are really market neutral.
In terms of you're talking to a new fund manager, what type of advice would you offer to somebody entering the market?
So what kind of advice? All depends. Yeah, to be ready. To be ready for a long journey. It's not gonna happen over time, and to make sure they are here for the good reason. And let's say you come to crypto for the money, but I like to say you stay for the revolution. And yeah, there is no corner cutting, and that's it. Yeah, it's mostly to be here for the good reason. And then a lot of advice. Yeah, that we build relationship with the manager we work with and some emerging manager who are very good guys. They just like, but for us, if I had more money, let's say I got 100 million, I would be able to have like 1-2 million to allocate to emerging manager to help them grow, which we can't do for the moment because too small on our side. So which is very challenging, but those people, they are very, they're doing the right thing. They did the right setup. So yeah, we speak. Even on the capital raising side, how to reach out to allocators. We help them introduce like our peers, people who can allocate money if we can't. Yeah, it all depends. Like them with our portfolio manager, like when we got family office, well, more keen to do just they want the 100x on crypto, so are looking for projects. They are bored with the 35% return we could offer on average. So we introduce them to some fund manager we work with, for them to do co-investment on some projects. So yeah, try to work on different things. So same we have the bank account opening has been something we've been helping people with. Yeah, find the right administrator, like whatever. It's
Awesome. Carl, this has been great. Really appreciate the insights. Thank you so much. Where could people go to connect with you and learn more about your company?
yeah, so you can connect on Twitter, Carl Szantyr. So yeah, my last name is it's written here, so you're gonna be able to see it. LinkedIn is easy, and yeah, you can send me an email, Carl at blockstonecapital.io, and yeah, we take it from there.
Awesome. Thank you so much, Carl. This has been amazing.
Yeah, great conversation.
Thank you very much. Have a good day. Ciao.
All right, you too. Cheers.
Bye. Bye.
We hope you enjoyed this conversation. Please make sure to like and subscribe for more content like this, and reach out if you're interested in starting a fund, whether it's a hedge fund, venture capital fund, or whatever other type of fund that you're thinking about. Let us know if there's any other topics that you'd like for us to cover. Thanks for watching.